Hey guys, welcome to another amazing Octa FX live trading session. My name is Ebuka Ambrose, and if you can hear me, go ahead and type in the comment section your name and where you're watching me from. Let me know if you can hear me. So type in the comment section your name and where you're watching me from right now. You can also go ahead to tell me if this is your first time, watching an Octa FX live or being part in an Octa FX live trading session. Okay, Mayowa from Ogun State. Welcome, Mayowa. Osaro. Okay, so if this is your first time, what we do at the live trading sessions is to analyze pairs and take trades. If I see an opportunity to take a trade in this live trading session, I would go ahead to take a trade. Johnson from Nigeria, Barbara from South Africa, Victor from South Africa, Isaiah from Lagos, Prince Williams watching from Nigeria. It's his first time. River State, welcome. Thomas from Edo State. Okay, massive welcome to every one of you. If it's your first time, welcome. Just going to go ahead and talk about, first thing, disclaimer. Okay, any opinion, news, research, prices, analysis, or other information discussed in this live trading session or linked to this presentation are provided as general market commentary and do not constitute investment advice. Trading is risky. So in the course of this live trading session, if you have questions or if you have currencies that you want me to analyze or questions that you want me to answer, you can go ahead and type your questions in the comment section, and I would constantly check the comment section to see your questions and answer them or analyze the pairs that you guys want me to analyze. Okay, since we have a lot of beginners, I'm just going to go over how or the things that you should do, some of the things that you should do, or the things that you should know to guide your trading, right? The first one is a framework, which is actually very important. As a trader, it's important that you have a framework. Now, a framework are like things or levels that would help you identify areas on your chart where buying and selling pressure could kick in, right? I like to give the example of a house. If you want to build a house, you're going to have a drawn building plan, right? Where that is drawn, the art of a building plan that you're going to follow to build your house. You're going to use whatever size of the living room, whatever size of the kitchen to build your house. So that's exactly how or what a framework does for a trader, right? And your framework should consist market structure. Now, what is market structure? Market structure basically helps you understand and define the current market condition. This is going to help, or this is going to give you buying and selling opportunities, right? With market structure, you can come into the market and define exactly what is going on in the market at the time. You can identify market structure with candlestick charts, chart patterns, trends, and where you have uptrends and downtrends and ranges. So a ranging market is like a market that is not trending. It's neither going up or it's going down. It's just ranging. It's contained between the highs and the lows, and then you also have supply and demand that makes up or gives you an idea on how to identify what is going on in the chart at a specific time. And another thing that should also be included in your framework is key levels, right? So your key levels should consist of trend lines, moving average, support and resistance. If you don't know what support and resistance is, support is basically an area on your chart where buying pressure could kick in, and resistance is an area on your chart where selling pressure could kick in. While I am analyzing some of the instruments or some of the currency pairs, I would show you guys support and resistance, what it looks like. You're going to see rejections on support and resistance, and you understand what I mean by buying pressure kicking in and selling pressure kicking in. Another thing that should be in your framework are your entries, right? If you want to place a trade, you have to enter a trade, you have to open a trade, right? So how do you open a trade? You can get confirmations from candlestick patterns. You can get confirmations with the moving average, where you trade the breaks of a moving average, either to the upside or to the downside. Okay, and if you open a trade, you also want to close a trade, right, to get your financial results, which is why you should also have an exit point included in your framework. So the exit point, you can use swing highs and swing lows, which are like the higher highs and higher lows, the lower highs and the lower lows, to determine your exit. And you can also make use of your stop loss and your take profit orders um, to close your positions. And lastly, risk management should also be part of your framework. And the first one is risk to reward, which basically tells you how much you want to risk on a trade and how much you want to make from that particular trade. And you should also have your stop loss that is going to hinder or halt further advance in loss of your trades should the market go against you. So these are like the things that um should make up your framework. These are like things that would help you identify area on your charts where buying pressure and selling pressure could kick in. So I'm just going to go ahead and look at some pairs. Guys, this is Friday. If you're familiar with trading times and sessions, on Friday is when business hours are coming to a close for the week and everybody's retiring to the weekend, right? So we're not going to see much volatility in the market. We may not see much volatility in the market at this moment. But yeah, we're going to look at what's going on and see what price could do in the coming weeks. While I do that, if you have your pairs that you want me to analyze, you can go ahead and type your pairs in the comment section. I'll look at the comment section to analyze those pairs. Okay, so the first pair we're looking at right now is Euro USD, the Euro dollar, right? We're on the 4-hour time frame, and the first thing you want to do is actually to go to the higher time frames, to get a clear picture or an overall direction of what the market is doing. If you attended previous live trading sessions that we identified this support level, this major support level on the monthly time frame, where market we saw the euro dollar come down to test this major support level on the monthly time frame. And I told you guys that I would show you guys what a support looks like. This is what a support looks like. So if you notice, whenever price got to this point, there was a rejection, right? It came down, got rejected, markets pulled back upwards. Came down again twice, got rejected, and markets pulled back upwards. Came down to this point twice again, it got rejected, market pulled back upwards. When I mean rejected, I mean buyers took control. They didn't let this market go below this point where you have the yellow box, and then market started to push back upwards. Okay, so go to the 4-hour time frame. And also this week has been a week of series of economic events and reports. We had the PMI released for the euro, we had PMI released for the dollar. If you don't know what PMI is Purchasing Manager Index, right? The PMI assesses the business conditions of the manufacturing service sectors of a country. You can also use the PMI to measure the change in spending of business firms. So back to euro dollar, we're looking at a break above this resistance. Remember, guys, resistance. When you hear resistance, right? Price has been resisted from going above this point. Price was resisted again from going above this point. It broke above, but could not sustain that bullish pressure. It couldn't push further upwards. Price came back in, was resisted, resisted again, and broke out, pulled back in, and finally broke out of this resistance level. So if you're looking at support and resistance, you should keep in mind that resistance is always the one that is being resisted when price is being resisted from pushing or going further upward, and support is when price is being resisted from pushing further downwards, or price is being stopped from pushing further downwards, right? The support is below, the resistance is above. Now, in a case of where price breaks above either resistance or support, then if in the case of resistance, the resistance turns to a new support. For example, if you have something like this, so let's say, for example, price broke below this point. This support now is going to turn to a new resistance for price, because there's a possibility that price could get back here and price would be rejected, or you could see some consolidations before a pullback to the downside or before a break above to the upside. So in a break above support, it turns to new resistance. In a break above resistance, it turns to new support. We can clearly see that the euro dollar has been trading above this trend line, right? And guys, remember when this live trading session started, I told you guys what you should or what should be included in your framework, right? Trends, support and resistance, all these things would help you identify what's going on in the market, right? So you can clearly see that price has been trading above this trend line, and right now the euro dollar is currently sitting at that trend line. This is not it's not at the moment, it's not really safe to trade euro dollar right now, because there could be continuation to the upside, there could be breakout to the downside, and we can also see a double top, a liquidity sweep double top. So usually with double tops, price, I'll give you guys an example. So price does something like this. I took the wrong two. Yeah, so with double top, price does something like this, comes down, goes back to that resistance. For a double top to be formed, you get to see two tops being rejected, right? But in this case, price went above before reversing to take out some stops at that level. We can't clearly call this a, sorry guys, we can't clearly call this a double top because it has not formed completely. We don't have that second leg, we don't have a retest at the neckline. The neckline is here. I think I'll use the colored box to indicate that so you see clearly. So we don't have any retest at this neckline to say, oh, okay, this is a liquidity sweep double top where price has gotten to this neckline, so we are expecting to see like a breakout or a rejection. We don't have that yet, and that's one thing with chart patterns, right? You can't say they are there when they are not completely formed, right? You can't force a chart pattern to be there if it's not there. So for Euro USD, if you're looking to trade Euro USD out, we want to look out for either a break below this trend line, and a more confident time to trade Euro USD would be a break below the neckline, this point here. So if price breaks straight down, maybe consolidates and breaks below this neckline, then we can be looking for selling opportunities for the euro dollar. An alternative scenario to buy euro dollar would be if price, if price shows some bullish signs, maybe you see like engulfing candlesticks and all that, and if price breaks above this point 1.0764, 1.07 70 level, then you can be looking for buying opportunities. But we're clearly seeing a rejection. I'm going to zoom that in for you guys. You're clearly seeing a rejection, right? If you look at this candlestick, you'd see that the buyers were rejected. The buyers were rejected and price came down to test this trend line. So generally, we just want to wait and see what happens here. If price breaks below, then we're waiting for like a retest to take Euro USD to the downside. I'll be more comfortable to take a sell position if price breaks below this point. If price breaks below this neckline, then I'll be more comfortable to take a sell position. Okay, so that is on euro dollar. I'm seeing somebody's okay. GBP USD. Okay, I'm going to check GBP USD right now. Also go ahead and type in the comment section the pairs that you want me to analyze. Sorry, I don't see that as a double top in Euro USD. It's a clear higher high. Yes, on the 4-hour time frame, you can also call this a. Let me indicate that. You can also call this a higher high, which is why I said that I would be more comfortable to go long on Euro USD if price breaks below this point. So a break below 1.0770 zone. I think I'm going to also a break above rather a break above the 1.0770 zone can give me an idea or an indication to look for buying opportunities on Euro USD. Aren't we selling when the price is high? Why do you say selling when low? Okay, so when you're trading the forex market, you're trading two currencies, right? You're trading two currencies. So if you're buying, let's take for example, right now we're looking at Euro USD, right? Euro dollar. So if you're buying euro, then you're selling US dollar, right? So if you're selling, then you're selling euro and buying US dollar. So you're trading two currencies. Okay, so someone said something about GBP USD. Sorry guys. So let's look at GBP USD. The first thing you want to do obviously is to go to the higher time frames. And remember, I told you guys that the higher time frames just gives you like an overall idea of what the market is doing. Okay, so we're already seeing a big rejection. You know, you're seeing that the sellers are being rejected right now, and price is going up. Yeah, price has made a retest at this zone. If I go to the lower time frames to show you guys why I highlighted that zone, it goes way back to, let's see, yeah, it goes way back to September 2020, right? So this was I can still take this back. I can still take this backwards. So this served as kind of a resistance at this point. It was broken through and it turned new support. Remember, I told you guys that if resistance is broken, then it turns to support because price could potentially come back to make a retest at that resistance. And if you look at GBP USD right now, we are seeing that price is already reacting, has already reacted to that zone. Let me just zoom in. Zoom in. So you can see that price has already reacted and the buyers have been rejected and it has pulled back in. So if you're looking to trade GBP USD right now, let me just go to the 4 hour to see. We can also draw a trend line on GBP USD, and you notice that price has been respecting this trend line in the past, you know, trading above this trend line. If it makes a retest, pulls back up, makes a retest, pulls back up, makes a retest, pulls back up, and price is currently, you know, at that trend line. Please, does this chart specify the price of the first currency or the second? So the prices that you see tells you how much of the second currency you need to get one of the first currency, right? So if this chart is moving upwards, then it's telling you that GBP, the pound dollar, is gaining more strength over the US dollar, right? There are videos on the Octa FX YouTube channel. If you check the description, you're going to see like playlists that would, you know, that you can click and watch videos on how to get watch videos to get a clear understanding on, you know, how currency pairs work. Okay, so the same thing, you'd have to wait. We have to wait GBP USD out to see if we're going to break below this trend line or we're going to break above this resistance level, because price was rejected here. I think price almost went back to that zone again, but was rejected twice. So we're going to see if price can break below this trend line, and then we can look for um, selling opportunities. I think I can also draw another trend line above. And one thing with price moving narrowly at a direction is that there's going to be a breakout, right? Either to the upside or to the downside. When you see price, you know, forming like an apex, moving so close to each other, moving so close to a point like this, there's going to be a breakout either to the upside or to the downside, and that's what we want to look out for on GBP USD. we can also identify resistance at this point. So if you let me zoom in clearly so you guys can see. You see that price failed to break above this point. First time it failed, second time failed, third time failed, and the bears brought the market downwards. Now price has failed to sustain the break above this point. So there was a break, yes, but there was no follow up, right? And now the price is returning. But we also need to pay attention to this trend line, because what has happened in the past is that price has made multiple retests at this trend line but could not break below it. So we can't say for sure that the pound dollar market is going to come straight down if there is no break and a follow up. Okay, so that's what we want to wait for in the GBP USD market: a break and a close, a follow up candlestick, and then we can start looking for selling opportunities. For the buys, I'll just wait for a break above this yellow zone, and then I start looking for buying opportunities. Please analyze gold. Okay. So first thing you want to do is to go to the higher time frames, and if you look at this let me zoom out. So gold has been respecting this trend line. There was a break below the trend line, but obviously that break was rejected and the market has pulled back in, into this trend line. If I go to the lower time frames, let's go to the 4-hour time frame. Please explain what the buying and selling opportunity means. So I said something about entry points, right? Entry points being, you know, included in your framework. Now, you can use candlestick patterns to identify your entry point. You can also use moving average. There are a lot of things you can use to identify your entry point. So you want to see indications from candlestick patterns that would indicate that, oh, okay, this market, there's strong bullish momentum, there's strong bearish momentum, because I mean that's what you're reading, right? You're looking at the chart and you're using the candlesticks to determine how strong the market is at a specific time, right? So that's what I mean by buying and selling opportunities. You want to pay attention to the candlesticks, see how strong or see how strong the momentum is, the bullish momentum or the bearish momentum of that candlestick is, and you decide to take your trade in the direction of whatever it tells you. Okay, you're trading what you see. Okay, so let me identify some key levels on gold first. Okay, we have support below. I think I'm going to use a ticker box to identify that. Yep. Okay, guys. So zoom it. All right, guys. So if you look at the gold market was rejected at 1865, the 1865 to 1870 zone twice. I didn't think it get no, it didn't get to 1870, but it was rejected within 1865, 1870 zone. That's twice, and this has served as a major resistance level on the 4-hour time frame, right? Let me see if I can identify some kind of head and shoulder formation. And remember, one thing with chart patterns is that if it hasn't formed completely, you can't call it that chart pattern, right? Because this looks like it's going to form a head and shoulder, but I can't say for sure because I mean, the right shoulder hasn't completely formed. There is no break below, the neckline to say that this is going to be a head and shoulder pattern. But two ways gold can go. If you're looking for selling opportunities on gold, then we want to see a break below this trend line. I think I should push that up a little bit. So if you're looking for selling opportunities on gold, then we want to see a break below this trend line. Let me see how many pips that is from current market price. So that's about 46 pips to the trend line. So we want to see how many pips. Yeah, 46 to 50 pips to the trend line. Delete that. And then a break below that trend line, you could see some kind of consolidation or a retest. Then you can decide to go short on gold when you get this confirmation. Somebody said something about confirmations. I was referring to candlesticks that show the bearish momentum, or candlesticks that would show rejection to the upside, like the shooting star candlestick, evening star, all these candlesticks that tells you that the buyers are being rejected right now. So that's for going short on gold. You can decide to do that if market breaks below this trend line, sustains that bearish pressure, and then your target would be first at the swing low. Your take profit target is going to be at the swing low. The first swing low, which is here or here. Yeah, this is the first one actually. That's going to give you like a 1-to-1. Your stop loss is going to be placed. You can decide to place your stop loss, above the trend line. If the bearish momentum continues, then you can extend your take profit targets. It all depends on your trading style, your risk appetite, and all that. The only way I'm going to go long on gold is if I see a break above 1865. If I see a break above this point, market has made multiple retests. I can still take this back to this point, right? You see the touches. So this is a major resistance for gold. If it breaks above it, then I could cancel my idea to sell and start looking for buying opportunities. And And my first target is going to be, at this swing high, which is also going to correspond with the 200 period moving average, or which could correspond with the 200 period moving average at the time. And then I'll drive the buys to that point, 1883, 1885 zones. So that's on gold. Let me go to the comment section to see if I have questions. This is my first time seeing an active trade. One thing I don't understand, if you click the description, you're going to see an English playlist where you can watch videos from trading experts that explains how the market works. What is RSI? RSI is relative strength index, right? RSI basically, let me see if I can put that up. It's an indicator that tells you when market is overbought, when market is oversold, so it tells you, oh, this market has reached a certain level where it's overbought, this market has reached a certain level where it's oversold. USD JPY. Okay, let's look at USD JPY. Remember, this is the closing hours. We are getting to the close of the trading week. This is Friday, so that's why we are actually experiencing low volatility in the market. Okay, USD JPY. I'm going to take some of this off so you guys can see clearly. Let me take out the moving average. Okay, so identify key levels. USD JPY is currently sitting at a it's currently being USD JPY has made a retest at this trend line. It has been rejected at this support 3 times, and it's been rejected at this trend line. The candlestick has not fully closed, so I can't confirm if this is a rejection or if it's going to break above, but it's a bearish candlestick, and we're seeing that price is beginning to pull back into so price is beginning to pull back. And if you're looking to trade USD JPY, fundamentally USD, the dollar is not doing so well. The results from the PMI that was being released, and most of the events actually doesn't indicate that the dollar is doing so well. It's not. So if you're looking to go short on USD JPY, then a break below this support and a follow up. By follow up, I mean a continuation of that bearish momentum can give you an indication to sell. We still have spaces to the downside that can be filled. Let me identify that. I'm gonna use this one. Yep. So we still have spaces that can be filled to the downside. You can get confirmations to go short on USD JPY after a break below this support level and continuous bearish momentum. This is also a major resistance. This trend line serves as a major resistance, because if you look at from the 9th of May, the USDJPY market has been bouncing off. So whenever it tests this trend line, it comes down. Whenever it makes a retest at this trend line, it comes down. Almost made a retest, but it came down, and now market is sitting at that trend line. But you can't really get confirmations to go short right now, because we are seeing multiple rejections here, and we are still seeing that we can't really get confirmations to go long, because we are seeing multiple rejections here. You can't also get confirmations to go short because this candlestick has now closed. It's actually really slow. The bearish momentum is not really strong. You can only say that you can only look for selling opportunities on the dollar yen market if we see a break below this. I think I'm going to use a ticker box to identify that level below 126.70, 126.65. And then, when you get continuous bearish momentum, you can look for opportunities to sell the USDJPY market. Okay, I'm looking at your questions right now. How can we identify a strong bullish and bearish momentum? You can use candlestick patterns. You can use higher highs and higher lows. You can use the trends, right? So an uptrend is made up of series of higher highs and higher lows. A downtrend is made up of series of lower highs and lower lows. So that can indicate either bullish momentum or bearish momentum. You can also use candlesticks. You can also use engulfing candlesticks. If you look at this long, or also if you look at this strong bearish candlestick that pulled back down, another one that pulled back down, so these are like indications that go to the lower time frames. See if I can let me zoom in. So you can see all these candlesticks are closing bearish, 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 and they're thick. The body is thick. The wicks, the rejections are smaller, right? So these candlesticks can indicate bearish momentum, and you can also use your trends to indicate where the market is going, indicate if the market is bullish or if the market is bearish. Use the higher highs and the higher lows to indicate if the market is bullish or the market is bearish. Okay, yeah, so these are my analysis for this currency pairs. Like I said, guys, the market is quite illiquid at the moment, so we're not seeing so much volatility to give us opportunities to take a trade. But you can also look out for the breaks above those zones that I identified to look for opportunities to take trades next week. It was a really amazing live trading session with every one of you. I'll see you guys here next week.